everybody, and thank you for watching the Wealth Guard Show. I'm your host, Tom White. Well, it was a choppy week in trading this week, but did anybody notice there was not a lot of news out there? Most of the news was international or political this week, but not a lot of economic or stock news. Well, anyway, we start with the US dollar. And a look at the daily chart of the US dollar shows us down below at 0.1. The stochastics are dropping. They reversed course, so we gave it a red mark. Up on top, 0.2 shows us that we've got the downtrend line, that blue line on top on the peaks, shows us that we've been in a downturn in the dollar since the beginning of 2011 here, and we're continuing lower. And a look at the MACDs and histogram bars shows us that the MACDs, they turned negative and gave us a bearish signal when the black line crossed over the red. And the histogram bars also fell below zero, and they're dropping, so that's also bearish. We gave this chart a red mark. And a look up top at the relative strength index, we see that that's also falling, so we gave that a red mark. Also, 0.2 below shows us we've got some broken support where we fell below that blue line. That's also bearish. So things are not looking too good on a daily chart with the US dollar. And a look at the weekly chart of the US dollar, the stochastics down below at 0.1 shows us that the stochastics are still negative. They're in overbought territory and they're trying to make a move to give us a bullish signal. It's way too early yet to tell, so we gave it a red mark. And a look at the MACDs and histogram bars on the weekly chart shows us the MACDs are negative and they continue to fall. Histogram bars, they're also declining, so we gave this one a red mark. And up top, the relative strength index is showing us it's negative too, so we gave this one a red mark. Down below at 0.2, we see where we've got some support at the blue line, right around that 74 mark. We'll have to wait and see if we can catch that support or not. The dollar just seems like it's at a turning point right now. And so, summing things up for the US dollar, we analyzed the daily charts and the weekly charts. And this was real easy. On the daily chart, stochastics, MACDs, and relative strength index were all negative. We gave them a red mark. Same for the weekly chart. All were negative. We gave them a red mark. So we have a grand total of 6 red marks, 0 yellow marks, and 0 green marks. Things not too good right now for the US dollar as it's looking weak. And now we take a look at the commodities represented by the CRB Index. And a look at the daily chart of the commodities CRB Index, we see down below the stochastics 0.1. They turned positive in oversold territory, so that's bullish. We gave this one our green mark. And up top at 0.2, we see we got some support also at that blue line going across there. So we're moving higher in the commodities right now as we move lower in the dollar. And a look at the MACDs and histogram bars on the commodities shows us down below that histogram bars, they're rising toward the zero line, but they are still negative. And the MACDs, they're starting to turn too, but they've been falling. So we gave it a yellow mark. Issue a little caution here. Up top, the relative strength index shows us it's improving. It's moving a little bit higher. It's still in neutral territory though, so we had to give this one a yellow mark, but things definitely look a little better here. And a look at the stochastics on the weekly chart of the commodities shows us that they're overbought and we just got a bearish signal and the black line crossed over the red, so we gave it a yellow mark. Up top, 0.2 shows us where we have a little resistance around the 375 level. We've yet to hit that spot. I think we're going to start to hit it here, as I think the commodities are going to reverse course. And a look at the MACDs and histogram bars. We see that the MACDs are converging, and the histogram bars are flat, so we had to issue a little caution and give it a yellow mark. Look up top at the relative strength index. We gave this one a neutral mark, as it's been falling, but looks like it's starting to rebound just a bit. Looks like we may have a little support here, so we gave it a yellow mark. And so, summing things up for the commodities, we analyzed daily charts and the weekly charts. And on the daily charts, we found that the stochastics, they were positive, so we gave it a green mark. MACDs and relative strength index were neutral, so we gave those a yellow mark. Over on the weekly charts, we showed that the stochastics, the MACDs, and the relative strength index, they were all neutral, so we gave those yellow marks. Summing things up for the CRB, we had a total of 0 red marks, 5 yellow marks, and 1 green mark. And we take a look now at the 10-year Treasury yields. And a look at the daily chart of 10-year Treasury yields down below. 0.1 shows us that the stochastics, they're improving a bit from oversold territory, so we gave this chart a yellow mark to start things off. And down below, 0.1 shows us the MACDs are negative, and the histogram bars, they're negative too, so we gave this one a red mark. And a look up top, the relative strength index, we see that we're bouncing off of the 30 line there. We got a ways to go before this turns positive, so we gave this one a yellow mark. And a look at the weekly chart, the stochastics down below, they remain in free fall. They just continue to decline from overbought territory. Looks like interest rates here can go significantly lower from this point. And it looks like the MACDs and histogram bars are about to confirm the stochastics. Down below we see point 1, the MACDs are about to cross. When the black line crosses over the red, we're going to get a bearish signal. And the histogram bars, they're about to drop below zero. This is very bearish, and it looks like a lot of money is going to start flowing into our treasuries. I mentioned earlier on Monday in an update I didn't know who would be buying our treasuries. As of now, 70% of the treasuries are bought by the Federal Reserve. Looks like Japan and some other countries here are going to be putting some money in the treasuries. And we see too up top, the relative strength index is looking bearish. It's falling too from the 70 line. Gave this one a red mark. And so summing things up for the 10-year Treasury yields, we analyzed the daily charts and the weekly charts. On the daily charts, we were neutral on the stochastics, so we gave them a yellow mark. And we were negative on the MACDs, so we gave those a red mark. And we were still neutral on the relative strength index, so we went yellow there. Over on the weekly charts, it was real easy. Stochastics, MACDs, and relative strength index indicated that we're going to go significantly lower in interest rates. We gave them a red mark. Overall, we had 4 red marks, 2 yellow marks, and 0 green marks for the 10-year Treasury yields. That means interest rates are going down and prices are going up, so money is flowing into treasuries. And we take a look now at Dow Jones Industrial Average. And a look at the daily chart of the Dow Jones Industrial Average. Down below, point 1 shows us stochastics are oversold, and the black line just crossed over the red, giving us a minor bullish signal. So we gave it a green mark. Up on top, point 2 shows where we had a little support, 11,600. It's very minor support though, and we'll have to take a look at some of the other charts here, because I don't think we're going to hold at that level. And we see the MACDs and histogram bars. The MACDs are negative, and they're continuing to fall. Histogram bars, they're improving, but you can see they've got a long way to go before they can cross that zero line and turn green and give us a bullish signal. So we do give this chart a yellow mark because it is improving somewhat, but it has still ways to go. And up top, the relative strength index shows us that it's also improving. We had a bounce there right around the 30 line, so we gave this chart a yellow mark. Take a look at the weekly chart. The stochastics look very negative. Point 1 shows us where they're falling from overbought territory, and they're looking like they've got a long way to go before they're oversold. That's why I question whether or not we're going to hold that support during that level on the daily chart. I've got some support at 11,500 on this weekly chart here, and I've been showing that one for a little while. We tested the 11,500s earlier in the week. We bounced in the high 11.5s. We called it 11.6 on the daily charts. But it doesn't look good from here. It looks like we can even go into like 11,000 from here. And the MACDs and histogram bars have both confirmed the move in the stochastics negative. As we see down below, the MACDs turned negative when the black line crossed over the red. And the MACD histogram bars also turned negative when they fell below zero. This chart doesn't look good, so we gave it a red mark. And up top, the relative strength index, it continues to decline as well, so we gave this one a red mark. And so summing things up for the Dow Jones Industrial Average, we analyzed daily charts and the weekly charts. On the daily charts, we felt positive about the stochastics as they were oversold, so we gave this one a green mark. And MACDs and relative strength index, they were neutral. We gave those yellow marks as things did improve there as well. And on the weekly charts, things looked very bad. Stochastics, MACDs, and relative strength index were all negative and had a long way to go, so we gave them all red marks. For a total, we had 3 red marks, 2 yellow marks, and 1 green mark for the Dow Jones Industrial Average. Looks like some money is going to start flowing out of here into the treasuries as well. And so we've been analyzing the US dollar, the commodities, the 10-year Treasury yields, and Dow Jones Industrial Average, and trying to determine where the strength is and where the weakness lies. We did this by establishing a score based upon the number of positives versus the number of negatives, and coming to a logical conclusion based upon the numbers. Coming in first place this week, we had the commodities with 1 green mark, 5 yellow marks, and 0 red marks. Coming in number 2 was the Dow Jones Industrial Average. We had 1 green mark, 2 yellow marks, and 3 red marks. Coming in third place this week was the 10-year Treasury yields. We had 0 green marks, 2 yellow marks, and 4 red marks. That means that the bond prices are moving higher and they're bullish. US dollar came in last place. We had 0 green marks, 0 yellow marks, and 6 red marks. So really, the winner this week is going to end up being the 10-year Treasury bond, as the yields are falling, which means that money is flowing into them, both foreign money and stock money. And take a look now at our market gauge. The object here is to be as far in the right or positive column as possible, and as far away from the left in the negative column as possible. First place this week came the commodities. We had 5 yellow marks and 1 green mark, so that was mainly neutral. But it was a lot better than some of the others here, as the Dow Jones was falling and had a little support Thursday and Friday, but looks like it may continue to decline. 10-year Treasury yields, they were looking real bad. They were coming down hard, which meant money is flowing into the Treasuries. US dollar was also negative, but it's on a tipping point here as whether or not it's going to go lower, as it's near support. And if we do head a little bit lower here, it looks like we're going to go a lot lower. If we do catch a little support here, we may have a little way to go before we continue this downtrend. Things don't look good in the dollar, though. So this week, it looks like the Treasuries are going to be the big winner, though. That's where the money is going to be flowing.